This is a fast-paced, ever-changing world, but one thing that is constant is gold and its value. But there is a dynamic shift that we're starting to see with this metal, and we're going to talk about that in this video as we explore. One thing that has changed dramatically in gold is its price. Now, the question is does the price match its value? Well, that's up for debate, but notwithstanding, we know that gold does preserve our wealth over the long course of time, but right now it does seem that gold is a good investment, especially considering what's been happening over the past couple of years, because gold can be used to evade U.S. sanctions, and not only in physical form either. We'll get into that in a moment, but first I want to remind you of channel sponsor Summit Metals, summitmetals.com. They are a fast-growing bullion company, probably the fastest in the world, and I have need to fill this thing up. But last time I checked, they're out of stock of these 1-gram bars, but nonetheless, this is one way that you can preserve your wealth and be able to track it through these wallets. Now, the one thing about these wallets is that, the size of them is, they might not be even numbers or, nice numbers that you like to see, but it's really about the size. These things are portable, can literally fit in your wallet. They're business card size. It's pretty cool. So check them out over at summitmetals.com. I'm going to be referencing a piece here from the Atlantic Council that gives us a little bit of insight as to how gold has kind of evolved, at least that's how it's seen. It's making a geopolitical comeback of epic proportions, especially after we saw on April 22nd when gold prices reached $3,500 a troy ounce. That's a record that's double what it was about 3 years ago. And gold has been appreciating in value at a record pace as many other financial assets struggle, except for maybe Bitcoin. But one thing is for sure, no matter how high Bitcoin gets, there's no replacing gold. This was the case during the 2008 global financial crisis and during the pandemic as well. What's different this time is that the price increase has been driven not just by investors, but also by central banks. You've heard me talk about that ad nauseum on this channel. Since Russia's full-scale invasion of Ukraine and the Group of Seven subsequent imposition of unprecedented sanctions on Russia, central banks that are worried about getting sanctioned want to protect themselves from from a potential global financial crisis or both, have been stacking up gold at record levels. Indeed, it has been something that has been remarkable, and there's no slowing down, at least not as of yet. Governments and private actors alike are giving gold's role in the global financial system a boost, but with a 21st century twist. Individual countries and groups of countries are experimenting with creating gold-backed digital assets and trading systems that bypass the dollar-denominated financial systems. In many cases, these initiatives are for purely economic benefits. However, gold is also being used by U.S. adversaries to evade sanctions or finance activities that counter U.S. national security interests. The rise of gold-backed currencies that circumvent the U.S. banking system, coupled with the sanction regimes, growing interest in the adoption of alternative currencies and payment systems could create a massive blind spot for U.S. financial intelligence and sanctions enforcement efforts. To reduce the proliferation of these alternatives to the dollar-based financial system, the United States should temper its use of coercive economic measures that can cause gold prices to rise and promote dollarization through trade and investment ties, especially with third world countries impacted by sanctions and U.S. adversaries. I tell you what, that's going to be quite a tall order. And I think Trump, with the tariff measures that are put into place, I think he's trying to reestablish and reboot some of the ties and trades. He's even offered economic trade and relationship with Iran if they were to comply with some of the recent world orders against them having a nuclear weapon. Now, have they been on pace? And we've seen this massive movement since 2022. And in all intents and purposes, we're talking 1,000 tons plus every single year since then. Russia's central bank is among the top holders of gold in the world, having built gold reserves from 2014 to 2020 to hedge against Western sanctions. While the central bank's gold reserves have not increased substantially since 2020, Russia's Ministry of Finance is thought to be buying gold from domestic producers without reporting it. In 2021, the Ministry of Finance doubled the share of gold Russia's national wealth fund to 40%. That's their version of the sovereign wealth fund, but many other nations have. And by the way, the United States is looking to do the same, of which gold could be a part. It's not been substantiated or announced yet, but wouldn't that be something, especially if we were to tie gold to the bond market? That would be quite intriguing to see that play out. After the West froze $300 billion of the Russian central bank's assets in response to Moscow's full-scale invasion of Ukraine in 2022, this gold hoarding strategy paid off. As gold prices skyrocketed this year, the value of Russia's gold reserves increased by $96 billion, offsetting one full third of frozen assets. Gold has also played a major role in Russia's illicit trade. For instance, the United Arab Emirates, a BRICS Plus member and a global hub for gold trade, as well as Turkey, have engaged in cash for gold trade with Russian banks. The Russian-based Lanta Bank and Vita Bank received 21 shipments of currencies such as US dollars, euros, UAE dirhams, and the Chinese renminbi worth $82 million from the UAE and Turkey in exchange for Russian gold. Late last year, the United States and United Kingdom sanctioned a network of entities and individuals involved in Russian illicit gold trade due to their role in generating revenue for Russia's war chest. Additionally, Britain's National Crime Agency published a red alert in late 2023 on gold-based illicit trade and sanctions circumvention. Apart from using gold for reserves and sanctions evasion, Russia is also trying to leverage the BRICS group as a platform to advocate for the creation of a gold-backed BRICS currency. Now, that didn't get off very far. That first was announced back in 2022 and 2023, and that speculated at that end, but they really was just speculation at that point. Now, there's no evidence that there's been tangible progress ahead of the next BRICS Plus Summit, which will be happening in Brazil in July. In the meantime, tracking the rise of gold-backed currencies and alternative payment systems across the world offers valuable insights into how they can be used for sanctions evasion. Then we have this is where the shifting dynamic is, not just in a matter of what central banks are doing, but gold-backed stable coins or cryptocurrencies whose prices are pegged to gold offer the most valuable property of gold, which is stability during financial uncertainty. They're also logistically more convenient to store and to sell than physical gold. Companies such as Paxos and Tethers capitalize on these qualities, creating gold-backed stablecoins in 2019 and 2020, respectively. Usually, each token of gold-backed stablecoin corresponds with a specific amount of gold. Like if you were to purchase 1 unit of Tether gold, investors receive the ownership rights of 1 troy ounce of physical gold on a specific gold bar with a serial number. Each gold bar weighs 400 ounces on average, so if investors were to like to redeem a gold bar, they have to own units worth 1 full gold bar. And by the way, the kinesis system, you can do it, I think 100 grams is the minimum, so much easier to do with kinesis. Issuers of these stablecoins hold gold reserves in safe vaults, typically in the United Kingdom or Switzerland. Third parties regularly audit gold reserves to confirm the supply of tokens does not exceed the amount of gold held by issuers. Now, there's third-party risk there, but nonetheless, that is where we're going. Governments are now following the lead of crypto companies. Earlier this month, for example, the Kyrgyz Ministry of Finance announced that it would launch a gold-backed stablecoin called USDKG in the third quarter of this year. The Kyrgyz Ministry of Finance holds gold reserves worth $500 million and plans to expand that number to $2 billion. This is to separate from the gold reserves held by the National Bank of the Kyrgyz Republic, which was among the top buyers of gold in the last quarter of 2024, but it won't track the price of gold. Unlike well-established stable coins such as Paxos Gold and Tether Gold, instead it will be pegged to the dollar, but solely backed by gold reserves. The reported objective of the gold-backed stablecoin is to facilitate cross-border inflows to remittances, which make up a third of Kyrgyzstan's gross domestic product. Russia accounts for more than 90% of remittances that flow into Kyrgyzstan, sent by migrant workers back to their families. Kyrgyzstan has not yet launched the stablecoin, but it is going to be used to facilitate cross-border flows with Russia. When there is a chance that certain actors could use it to export sanctioned goods to Russia outside of U.S. authorities' oversight in the SWIFT system. Financial institutions in Kyrgyzstan have already been sanctioned for their involvement in Russia's sanctions evasion schemes by the United States. Earlier this year, the Treasury Department sanctioned this bank for facilitating transactions on behalf of the U.S. sanctioned Russian bank. And so there's a lot of that happening in the United States as well. Are going to be getting involved in more digital asset stable coins. Scott Bessent just recently made an announcement to that end. Could gold be a part of that as well? I don't know, but I tell you what, it's pretty fascinating. And one thing is for sure, when all of this thing happening, and with works by the United States Senate recently advancing the Genius Act to regulate stable coins, one of the major deficiencies of this bill would be it does not adequately regulate offshore stablecoin users. So I think what it is, they got to get on board. The United States is, and according to Scott Bessent, they're working in that way to be able to find a system to be able to regulate effectively, but yet to be able to make them prosper. And gold should be a part of that. Stable means just that. Yes, the dollar is stable in its loss of value, but gold is eternal. At least it has been around as long as mankind has. No question about it. Let me know what your thoughts are down in the comments section below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.